what are supplemental property taxes? To answer that question, we need to know what property taxes are. Now, property taxes are the taxes paid to the county based on the original sales price of the home when they bought it. Now, every year, the county is going to reassess the value of that house based on current market trends, and that can cause the property tax bill to go up or down depending on what happens in the market. Now, supplemental taxes are the difference between what the old homeowner is paying in property taxes and what the new homeowner is paying in property taxes based on the sales price that they paid when they bought the house. So what happens is the county, since they only reassess the value once a year, they're a little behind in the times and they need a little bit of time to catch up. So when they send out their property tax bill, like here in California, it's around October, what will happen is the bill that goes out to the new homeowner is actually the old homeowner's property tax bill. So they have to send out a second property tax bill that's called the supplemental tax bill. Now, as you can see, here is a copy of a Sacramento County supplemental tax bill. Now, it says supplemental assessment in the upper left-hand corner. And if you look down in the bottom right-hand corner, it shows that the tax bill is for $4,132.39. So here's a copy of a standard Sacramento County tax bill that the seller of the house would have received if they decided to keep the house and not sell the house. Now, as you can see in the lower right-hand corner, that they were supposed to pay $3,807.10. So here's how the supplemental taxes were calculated. Now, the buyer who bought the house in 2022 paid $665,000, meaning that their property taxes were $7,840.49. Now, the seller who originally bought the house in 2014 only paid $290,000 for the house, which meant that their property taxes were $3,807.10. Now, the difference between the two property taxes is $4,132.39, meaning that is the supplemental tax owed. So the next question is, am I responsible for paying the supplemental taxes? Answer is yes. Now, if you have an impound account that pays your taxes and insurance for you every month, you can ask the bank or the servicer of your loan if there's enough money in the account to pay the supplemental taxes using that balance. I've heard instances where the servicer will ask for a copy of the supplemental tax bill, and then they'll pay the bill for you as long as there's enough money in the account to pay it. I've also heard instances where they won't do that, in which case you as the homeowner are responsible for paying the supplemental tax bill using your own funds. Hopefully you found this video helpful, and I will see you next time.